Alright, welcome back to another video. Okay, so how to identify true market structure shift. Okay, and this is definitely a format that most traders struggle with, because majority of the time, you do have continuation strategies, breakout strategies, but there is a lot of reversal strategies. Now, when it comes to reversals, most traders, follow a system, that is basically taught on YouTube, or strategy that you might see on social media. And we all understand the most famous one is, of course, the change of character. Okay, so let's say, for instance, we have a market that is trending to the upside. Okay, now when this market decides to change or to a market shift, we then see the market do one more structure, push to the upside, grab the high, and push to the downside. Okay, so here we have a high captured, okay, and a low. And then the expectation is, of course, this is, traders might wait for the market to reverse and then enter somewhere here, whether it be a supply, fair value gap, and then they will take their trade for price to continue to the downside. Now, this is fine, okay. However, I think that the system is extremely flawed, because when we have the basic structure of a change of character, right? So let's say the market is pushing to the upside, grab the high, grab the low. The market could decide to replenish and fall. Okay, that could happen. However, when the market does something like this, which it does, okay, the prices are extremely complex, because the market is not gonna just be still like this. Okay, the market will look something like this. This is what the market would look like, right? Just all complexity. And when it comes to the change of character, okay, it creates basic format, structure, organized fashion. But that is what traders want, but that's not how the market is. It's just continuous uncertainty, breakouts to the downside, then it goes up after that, breakouts to the downside. There's many change of characters in this market, right? But how do we know when it actually shifts? Now, here's the thing. When the market does a change of character, okay, this push down, okay, it's a breakout, that's fine. This could just be a liquidity grab, grabbing the liquidity that is resting beneath these lows, okay. And the market could push as far as it wants to. It doesn't have to be some formal short term, just not interacting with this low. The market could push all the way down, capture everything that's in this market over here. And then after that, traders would think, the market is pushing to the downside, maybe we should start selling. But no, market turns, continues to the upside. This is a very realistic format, and this creates extreme amount of confusion, because you have traders who are going with the flow, holding their positions, doing a good job, but they get liquidated because many different formats of mistakes that could happen during this time. But this push alone could take everyone out here and then continue the underlying trend, whether they were going break even, grabbing partials, however these people trade, they will get liquidated, and then price will just continue to the upside. Okay, now this is why I say a change of character is very flawed, and it's not actually going to give you the real market structure shift. Now, the way I like to do it is like this. Okay, when the market is trending, okay, and we are waiting for the market to reverse, what do I wait for? Okay, all I need is for the market doesn't have to grab a high. For instance, if it needs to reverse to the downside, I don't care about that. The market could even do a double top, or even something like this. Okay, and the market just needs to create a break like this. Okay, and of course with a body candle. This over here needs to be a body candle that closes beyond the wicks. Okay, and then after this, all I need is for the market to again push up, grab at least one form of liquidity. Now in this instance, because we're pushing down, liquidity will be present above the highs. Okay, liquidity will be resting here, liquidity will be resting over here. As soon as the market pushes up, grabs at least one of these liquidities, I will then look to take the sell, and this is what I would define as a real market structure shift. Okay, this right here. Now this could be many different variations. Okay, this is where price becomes complex, so I'm going to show you exactly how this looks on a realistic chart before we move on. Okay, so let me just show you one more example on the basic format. So let's say here, let's draw a chart like this. Okay, market is trending. The first thing is I need is a breaker structure like this. Okay, breaker structure, and now we have liquidity above this high, correct? Because we are looking to sell, right? Market's gonna reverse. Before before we continue, we need price to either push up, grab this liquidity to continue down, or if that doesn't happen, which will happen, the market can create more forms of liquidity. Oh no, sometimes this path, hey, let me just move this, let me just throw a new one, or new forms of liquidity like so. Of course we have liquidity here, we have liquidity right here, and then all we have to do is just be patient, right? Be patient, wait for the market to eventually push up, grab these highs, for then the market to continue and verify that market structure shift. Okay, this has got nothing to do with a change of character. This has got nothing to do with two breaks for, like, I don't know how traders normally analyze, but this is all it is, waiting for the market to give a verified breaker structure, formats of liquidity, wait for price to grab the liquidity for the market then verify the structure shift. Okay, and of course when the market interacts and grabs the liquidity, the market can easily interact with a supply, demand, fair value gap, whatever traders use, right? Whatever you want to use, that could be the case. Okay, so that was the basic framework. Now let's go to the real chart. Okay, now this can be present on any time frame. Okay, this is of course can only be analyzed on a candlestick chart. I don't think it can work on any other charts because you need to verify closures, right, of the candles. Very important. So right here, let's look at the 15-minute. Okay, so let's just look at directional the order flow of this market. Okay, so here we have a push down and a push up. So remember, this is a reversal format, so we need to see a proper market structure shift. So the shift happened within this area. Okay, so the type of pattern I just described before this should be chilling somewhere here. Okay, so here we had a push down, the market stalled, pushed up, the market reversed. Okay, and then vice versa here, the market pushed up and then stalled and then pushed down. So that pattern that I verified earlier, spoke about earlier, should be somewhere within this range. Okay, and then vice versa here as well. The market, even though it didn't like have a big impulse, there was still a move to the upside. Not even, maybe about 60% of this move here was probably still money to be made, and then the market's just been stalling and pushing to the downside. We're still waiting, maybe the market will give something from here. Okay, that's just how the order flow looks on this chart right now. And then of course I'll go back in time, but let's just do this one right here. Okay, so of course we had a push down, push up, so I'm going to analyze the market within this range. Okay, so remember what I said, I first want a breaker structure, and then a liquidity. Okay, so because the market is pushing to the upside from here, we need the forms of liquidity will be beneath the lows. Okay, so let's see, push down. So we will need to just focus on the candles within this area. We don't need to worry about the candles here. Let's just start analyzing from this point. Okay, so here we need to first find a breaker structure. So here the market had a high. This is a wick. We need a body to close above a high to confirm the breaker structure. So that is not a valid breaker structure. Here as well, the market did not close above. Okay, so it only wicked it. So that is an invalid breaker structure. And then finally, right over here, the market had closed with a full body candle with this candle right here. This is our confirmed breaker structure. Very, very simple. Okay, and then after this market had confirmed this candle, where's our liquidity? Our liquidity will be beneath the lows. So here is a low, liquidity. Here is a low, liquidity. And then look, as soon as the market pushed down, grab this first liquidity. Remember what I said, the market doesn't have to grab all of them, it just has to grab one, and then boom, look at the impulse. After that, the market had pushed to the upside. Very, very simple, right? And of course, after the market grabs this liquidity, you can maybe zoom in to a lower time frame. If you trade candlestick charts, here's a perfect entry after the double candle engulfing format, or triple I don't know what you call this, but a triple candle bullish move, and then boom, there the market went up. This is not an entry strategy video. I'm just, whatever you want to do after the market grabs the liquidity is your choice, right? But let's continue with the reversals. So that's reversal one. So here the market pushed up, now had reached a equilibrium or a form of resistance. Now let's look for the pattern. So here, of course, we need a breaker structure here. That was not a breaker structure. That's invalid because the candle did not close beneath the low. Again here, invalid breaker structure. These are all candle wicks. Okay, here as well, not a valid breaker structure, all candle wicks. And then finally, if we pay attention here, we have a low right here. Candles closed beneath this low with this candle right here. After that, immediately we can clearly see here is liquidity right here. For this instance, because this market already grabbed this liquidity with this candle in that moment in time, the market did not confirm a breaker structure. So what we can do is we could just invalidate that liquidity. So the only one available is this one right here. Okay, that one has not been tapered with. Now remember, I said after the break, it doesn't have to come for these old liquidities. It can generate its own, like so. Here's another high right here. Okay, another high right here. Okay, and then finally the market decided to push up, grab both of these highs before pushing to the downside. Okay, very, very simple, right? And then also we can even use this supply candle for a form of SMC concept right there. Okay, so here the market had found support, of course, within this area again. So here we can clearly see another breaker structure. Okay, here's a breaker structure right there. So where's our forms of liquidity? Here is a low right here. Here is another low. Here's another low right here. Okay, of course you can clearly see this candle did not take that liquidity. It was clearly this over here. Okay, this candle right here. Now here we can clearly see that the market, of course, had volume to the upside, only about let's just say, let's actually do a proper estimation. Supply default, only about, let's say about 65% of that entire market format here. So remember that when, let's say for instance, if you want to hold until wherever you want, right, it's very important to take partial, go break even as the market is moving in your favor. Let's say if we're entering on the 1 minute, again, here's an engulfing candle. After the liquidity, maybe an entry here. Okay, the market of course already hit 2R. When you, let's say for instance, if the market goes 1 to 1, you should obviously protect yourself. When it hits 1 to 2, maybe grab partial, maybe move your stop loss a bit higher, because again, there will be volume, but it won't be volume. You can't expect crazy volume. But again, if we look at this market, the market is overall in a downtrend. Okay, so maybe buys would work clearly, but don't hold it for too long. If you get a sell move like here, for this example, this one has of course massive volume, so you can hold a trade like this if we are moving with the overall trend. With the buys, you could hold, but not too long, not as long as you would hold for the sells. Okay, so that is 1, 2, 3 example. Let's do one more example. Okay, so here on top, let's see, over here. So here we had the market push and then reverse. So of course I'm going to analyze price action sitting within here. Okay, so let's start. So here we have the market push down. Let's look for a 15-minute breaker structure. So here I immediately see a breaker structure over here. Okay, with that, zoom in a little bit more. Okay, and now where's the liquidity? Liquidity is sitting over here. Liquidity, and liquidity is also sitting right over here. Now for this example here, we can clearly see that the market did grab the liquidity off of this low, but there was no massive impulse to the upside. We can clearly see that the market had a much better, had a higher desire to grab the swing liquidity, of course, which is right here at the bottom. And then we can clearly see that here was volume to the upside for an ultimate move to the upside, right? And you know, this is where complexity comes in within the system. Of course, maybe taking an entry here would have not been the best idea based on this price action here. We had an immediate breaker structure again after that. Maybe as soon as the market does something like this, you would rather wait for the market again to give another breaker structure like here for the best entry for this market. Okay, and then that would have been the move. Okay, but again, not an entry strategy. I'm just showing you points of reversal, how exactly you can actually verify a reversal. Okay, and then again, another example right here. Market pushed and then retraced from this point. So we'll analyze the candles within this area. So what we're looking for, breaker structure, and I can already see it with this candle right here. There's liquidity. I mean, here is the breaker structure with this candle. Where's the liquidity? Liquidity will be above the swing, above this high, and also above this high. And then again, as you can clearly see, the market immediately just shows that one liquidity, and then boom, there the market fell. So this is of course how you can really confirm a market structure shift. Of course, backtest this on all the time frames as you want. Again, you can do this on higher time frames like the 4 daily, but I suggest do it on the lower, because remember, to print these candles takes a very long time, especially the daily and the weekly. You know, you don't want to be catching trades once a month, you know, so at least practice this on the lower time frames and then you see how far it takes you.